Welcome to Business Innovators Radio, featuring industry influencers and trendsetters sharing proven strategies to help you build a better life right now.
Hi, everyone. This is Tammy Patzer, and I'm really excited because today we have LaWanna Bradford of the Bradford Group, and it's a really special interview because LaWanna and the world is celebrating the 15th anniversary of the Bradford Group, which is all about helping people achieve the American dream. And for many people, the American dream, of course, is home ownership. And let's just say in the last 15 years, it's been a little bit maybe explosive, LaWanna. What would you say?
Yes, it's been a tumultuous ride.
That sounds perfect. So let me just talk a little bit more about the Bradford Group. The Bradford Group helps you get loans, and it could be for a home or commercial property. But in a nutshell, that's what the Bradford Group is all about. And I don't really want to go deep into all the little nitty-gritty details about the loans because, of course, I imagine there are basically hundreds of possibilities when
Yes.
it comes to a loan. Just like every person is unique, there's so many loans for different types of individuals. But congratulations on 15 years, because I think back, what has happened in the 15 years. That means you as the Bradford Group survived the housing crisis that went started in 2007 and
Yes.
it went quite a few years. I know for me, I didn't get my issues resolved until 2012. So it was quite a long time. So tell me a little bit more about the Bradford Group's journey and how you have actually been able to survive.
Well, we started as a DB, doing business as trying to get our feet wet to see, is this really the industry we wanted to be in? And it actually started with my brother. Harlan Bradford was the founder of the Bradford Group. And when I left corporate America, I came on board and said, well, I want to help you with the compliance issues and, getting the company built up. And I just got bitten by the mortgage bug and became intrigued by it. And said, well, how can I become a part of this equation? And we discussed and ended up buying into the company. And what we wanted to do, our purpose was to identify what were the biggest pain points facing homeowners at that time, as people trying to navigate the lending world. And we found that most people were really frustrated that they weren't being heard, that they were being sold something that they didn't want. And so we developed a process called the customer reconciliation system, where it literally takes the client through the buying journey before we even start to do the loan, because we wanted to make sure that they were comfortable and understanding, because when you're going for a loan, you have to be very transparent and exposed, right? About your finances, your financial management, what you want, because all of that's going to unfold. So in doing that, life was doing really well. And so for 2 years, we were exploding, and we were dabbling into some of the subprime area, and people were like, "Ooh, that's a bad word." Well, actually, the loans were not bad in how they were designed. And again, it was about being transparent with your clients, which we were. But unfortunately, as that piece started to really grow for us, when 2007, 2008 hit, not only did that spiral, but every loan product that we had was in jeopardy. And so we had to quickly determine how were we going to stay afloat. And my brother took the exit. He came up with a company and he said, I need to go to something more secure. But I said, well, I'm holding on to our vision and dream of this company. So you go, I stay. And what I believe made us successful was I had to say, well, all areas in mortgages weren't being hit as hard. Residential, yes. But on the commercial side, it was more stable. So I started to quickly gear up my team and understanding the commercial market. And that is what helped us to survive that wave, is knowing how to, the word people are hearing now, pivot. I like to say how to reposition to still remain relevant in an industry that I felt that we were doing very well in. And so that's what we did. We kind of shifted our portfolio, not so much on the residential side, limiting that, and really exploding on the commercial front.
Well, that's really exciting because I really hear you. Here's a little known fact about me. I actually had my mortgage broker's license back in, I think it was in the 80s.
Oh, wow.
And it was a hard license to get, but it wasn't for me. Like you said, you discovered that, hey, I really enjoy this adventure with mortgages. So you took it over. Your brother made his exit because he wanted more security, stability. So tell me a little bit more about how you've grown and how what's going on now with the mortgage industry, because I know in my area, and I'm sure where you're at, it's a hot seller's market right now, and some of these properties are getting bids like over the asking price.
Right.
Do you work with those people, or
yes,
what are you doing now with the different people, and do you have a specialty?
Yes, we do work with, we still work with homeowners through our partner company, which is Malibu Funding. And our bread and butter, if you will, is on the investment and the commercial side of the house. And you're right, there's a shortage out there, and people are paying more than the house is valued at. There's bidding wars going on. And what we do is our area, our sweet spot is working with investors. So those that are looking to buy 1 and 4 unit properties, or even multifamily units, and helping them to secure those or refinance them, or, as I like to say, harvesting the equity to maybe buy other properties, as well as that commercial business owner. So whether that's someone that is leasing the entire commercial space, or maybe they're in that owner occupied state. So they may have a storefront that they have one part of it that they are actually occupying for their building, but then leasing all the others. And so for us right now, because we know commercially with the pandemic, how so many businesses were hit, we're now working with the commercial business owners and helping them to understand what can they do to still remain afloat in their business. How can they use that existing equity that they have to help fund their business?
So with the pandemic, it sounds like we've received good news recently that people are getting vaccinated, and the mask mandates you're told now that if you are fully vaccinated, that you don't really need to wear a mask anymore. And that means a lot of things are going to be opening up, I imagine, in the next few months and into the years as more and more people are fully vaccinated. So with the pandemic, and you said a couple things that I thought were interesting. You said harvesting the equity out of an existing property. And then you also talked about helping investors get those multifamily units. Here's a personal question about that. So if you have a multifamily unit and they're all rented out, that means that this property already has income coming in. Do they take that into consideration when someone's buying a property?
Oh, yes, definitely. So that's called the debt service ratio. And they're looking at not only if it's existing property that you have, what you may owe on it, but from an income producing standpoint, how much income is it bringing to you to what you have to pay to manage or service that debt on the loan. So yes, those are looked at very favorably because it safeguards and protects that investor or lender, if you will, in how they lend their money. So they're looking at how can I manage my risk. They're risk adverse or want to minimize their risk exposure. So if you have an existing property that is rented, that's cash flowing, it's like you're the perfect candidate. And another thing, Tammy, that's real important is we know a lot of people are self-employed or small business owners. And because of the tax laws, we're able to write off a lot, right? And then it's like, well, how can I then qualify? Well, there are so many new products that are out there, for example, bank statement loans. So we're not necessarily looking at your tax returns. We want to look at how much you are depositing in your bank account. And we'll take maybe a year to 2 years of that, average it out to come up with what would have been that adjusted gross income, but we're using it as bank statement income to qualify self-employed borrowers for whether it's a home or investment property. And in some cases with investment properties, we can still do stated income loans based on your credit score.
Wow. Well, that's good to know because that actually is one of my questions because I am one of those self-employed people that I do, like Donald Trump said once, he said, hey, I take advantage of all of the laws when people were questioning
yes.
taxes. And I think, I have an accountant that he does whatever he does and sends me a profit and loss and says, okay, here's everything. And I go, oh, okay, because it just got so complicated with all of the, expenses and all the things that do come along with running the business. So that's really good news. And again, I know that in your heart that you really like to help women. Tell me a little bit about as a woman entrepreneur or a woman investor, how can someone get prepared if they're looking at wanting to do some of these investments? Like you said, you actually work with people before you ever get to the loan so they know what the process is. So what would that look like?
Sure. Well, the Bradford Group, we actually have some investor courses, and I haven't done any this year. Typically, they're live, but we do have investor courses for that first-time investor, where you can understand what it means to, first of all, evaluate what your risk is, how much you want to invest. Is it short term? Is it long term? Are you looking to fix and flip? That quick get in, get out. Or are you looking for that sustainable cash flowing property? And then identify, which is so important, your team. I tell people before you start buying property, who's your team? From your accountants, your appraiser, the adjuster, the inspector, your mortgage broker, your contractors. You want to have a team in place, unless you're going to happen to do it all, which no one does, but a team in place to help you so that you can maximize the gains as quickly as possible. Because the worst thing is to buy a property, because I've been there. If anyone remembers the movie The Money Pit with Tom Hanks, yeah. I ended up investing. One of my very first investment property was the Money Pit. It looked so beautiful on the outside, and everything that could possibly go wrong with that property went wrong. And I didn't have the right team. And it cost me so much money to get it up to par so that I could sell it. And again, I just went in very green, not having all the knowledge, thinking, oh, this is going to be a simple purchase, fix and flip, but it wasn't. It was far more, because when you open up those walls, you don't know what you're going to find. So again, I try to tell women, especially, become very educated, because when you think about where we stand from a financial security standpoint, we are far less secure than men are. Women, and you've heard me say this before, Tammy, women, by the time they reach the age 65 and say they're going to retire, have $17,000 a year in retirement income. That's sad. That's here in the US. Those are real numbers. You can, Google it. I'm not making this up. So we know that real estate is one way to build wealth, along with many other variables that are out there. So I feel if I can help take my passion about financial security, use this as a vehicle, create this aha moment for women, and then give them the tools that they can use, then they can impact, their lives and then the lives of their family.
So you said that you have some of these investor courses that are normally live. Have you considered testing maybe to do some on Zoom?
I am now. Actually, I hadn't really thought about it this year, but yeah, I think it's a great opportunity to have some. And I have the way we do it is I come from as a mortgage professional, but then I'll have my team. I'll have a real estate attorney there. I'll have an inspector there. I'll have a construction manager. So the experts are there sharing their knowledge, but also they're a team that you can leverage if you don't have your own team.
So you're headquartered in Atlanta,
yes.
But can you work with people all over the United States?
Yes, we do loans in all 50 states. I also can do loans internationally. I do work with international investors as well. And on the residential side, we're in 6 states. So Las Vegas, my mind went totally blank. I'm sorry, Nevada. Las Vegas is not a state. Nevada, California, Texas, Florida, Georgia, and North Carolina. And again, that's with our partnership company, Malibu Funding.
Oh, okay. Well, that's good because I heard Florida and that's where I'm at. So with that, I think the women, it's really important for women listening to this conversation because when I first, got interested in investing it was a long time ago, but of course I was a single mom, divorced. And when I got a divorce, guess who got all the credit? It sure wasn't me, but things have changed a lot. So when you look at all of these issues, like, is there cash flow coming in? What kind of credit scores do investors have to have to even be considered for a loan for an investment property?
To get the ideal situation where you have the best score, the best loan to value, meaning how much loan you have, percentage of your loan to the value of the home that you're buying, you want to be at 720, 740. That's the sweet spot. Can you purchase for, a lesser credit score? Yes. Can you refinance with a lesser credit score? Yes. But for investors, again, that sweet spot is at 720, 740. It gives you negotiating power. And people don't realize that there's different tiers of the loan program that can be open up to you. And also the cost of the loan is less, the better your credit score is. So I always encourage people, know what your credit score is. Look at how you can improve it. Some people are like, well, I'm not going to do anything right now. Well, you never know when an opportunity may present itself. And if a 720 score can save you thousands of dollars, why not? Right?
Right. Well, I think that's important because I know one time I checked my credit and it had a fruit and nut company on it that said I owed them money. And I'm like, I've never ever bought any fruit and nut. But that is something important to check to see what it says on your credit score. And I don't know, things like Credit Karma and everything like that, they're so confusing because the way it used to be would be like you'd get your credit score once a year or something. Now it appears that your score goes up and down every week. It's very frustrating to see, all of those different things happening with credit scores. But of all the things that someone should look at when they're thinking about getting a mortgage, either for residential, commercial, or investment, what would you say are the most important things that they should really look at before they go look at property?
I would say the number one thing is how much house can you truly afford? And that's from the standpoint of when you're looking at the mortgage, because most first time home buyers or even investors, they think, okay, well, I'm just looking at the sales price. Well, we know that's one part, that's the acquisition, but what about your taxes, your insurance, the maintenance of that home? Can you actually afford everything in it? And I'll give you this funny story. My cousin bought this beautiful, I like to call it a mini mansion. It was like 4,500 square feet. It was cute. And we went there for his open house, and he had all these little space heaters around. And I was laughing. I said, why do you have all these space heaters? He's like, do you know how much this costs? How it costs to heat? And I laughed. I said, then you can't afford it. You really can't afford it. So I think that's the most important thing, is to ask yourself, how much can I truly afford? And look at your monthly payment. And so when you're having that conversation, you want to not only say, if you want a $200,000 home and your credit isn't as good and you don't have much to put down, then can you afford a $2,000 house payment? If you can't, if your house payment all in taxes and insurance is $1,200 a month, then you've got to find a home that will fit that $1,200 a month payment. So I tell people to be very payment conscious, because that's literally going to drive whether you're able to maintain that mortgage long term. Because the last thing you want is to come home and have that little note on your door, or to get that call saying, we're going to have to foreclose on this home.
Yeah, that would be pretty traumatic. And I remember back in 2007 and 8, people I knew, they were like literally walking away from their homes. And I remember I wouldn't go. I just kept fighting, and I finally won. But I knew people who literally, they had these beautiful homes and they just left them. And I just couldn't believe that was happening. So with that, let's come back into the now, because mortgages and home ownership and rentals, I think they've just lifted some of the rental eviction moratoriums. And I know that most banks have worked with people on their forbearances and things like that to help them.
Yes.
Are you seeing anything related to that? That, like, is this going to be some kind of bursting bubble, or are the banks this time going to try to help people keep their homes?
That's a really good question. And I would say at the beginning of the pandemic, we were real excited when the feds lowered the rates. And I thought, oh, this is going to be amazing. We're going to do all these loans. Well, yeah, the feds lowered the rates, and then suddenly the banks stopped lending, from the standpoint that they made their guidelines so stringent that it was very difficult. Or for the investor side of the house, some programs they put on hold or did a whole, reassessment of what they were going to put out there. And so now they're opening back up with some of these programs, but they have these quote unquote pandemic lending policies where it's things that would have been acceptable and gone through 18 months ago. Now it's not as easy. That's why I tell people it's really important when some people are like, well, why do I need to work with a mortgage broker? I can just go to the bank myself. You can, if you have that great banking relationship, but what a mortgage broker acts as is that advocate for you, because we know both sides of the coin, and then we can communicate. And sometimes it's about packaging and positioning your story in a way that makes sense to get that concession or get that exception to the policy in order to push that loan through. Whereas you on your own, it may be difficult to have that conversation because you may not know how to navigate, the changing waters. So yes, Tammy, things are opening up, but with conditions, because there's still this concern, will people be able to maintain that home?
Well, that's good information. And again, you said that magic word that you at the Bradford Group are advocates for the borrower, because that is one thing I think that is important. It doesn't matter if it's in the mortgage business or in any type of business, but you really do need the advocate, someone who's, your well-wisher. They're there for you, and they're going to, help you navigate all of that. So 15 years now, 15 years in the future, I'm sure you're planning on continuing on with all the great service. So what is in store? Are you doing any celebrations? And if you want, I'd really love to hear more about some of your other advocacy that you do. I know you do the celebrate. I know it's
Celebrate you.
Yeah, celebrate you, and I think women. So, but what do you see moving forward? For Bradford Group.
Yeah, I see us always being an advocate for those that are trying to get a piece of the American dream, through real estate ownership, whether it's that homeowner or that investor or that business partner, but doing it in a way where we are truly that advisory advocate position. Because I feel that if I am able to engage you and have the best conversation with you that provides you with the information you need to make the best decision for you, it's already a win-win. Yes, we want your business. I mean, that's bottom line. I would love for you to do business with me. But if at the end I've given you what you need to make the best decision for yourself, and maybe it's not with the Bradford Group, it's okay. So I think that's what's made us so successful, is we're not so hungry for the dollar. It's about relationship, because we don't see our clients as one-time transactions. We really see it as an ongoing relationship. And what we want to do going forward, you asked about the celebration, is we're kind of pushing the next 2 weeks, letting people know we're at 15 years, but reaching out to some of our older or former clients. I don't want to call them old, former clients, and telling them, celebrate with us, but also engaging them with some of the new products and services, because your mortgage isn't static. Everyone's at different phases of your life. What if you purchased the property 10 years ago, but now you see retirement on the horizon? Well, a conversation with us will help determine when's the right time to pay off this loan. Or do you ever want to pay it off? I mean, those are real conversations that, that we want to start having, with people again, based on where they are in their mortgage journey. And the other thing is, going forward, is my niece and nephew now will be 16 this year. So the goal is that the Bradford Group will turn over to them. And this will be the first year that they will be hired with the Bradford Group, with just, again, helping them to understand financially how the management happens. Will they be working on loans? Absolutely not. They're not of age to do that. But just to understand the business nuances, because one day I do hope to turn it over to both of them.
Wow, what a legacy. I mean, that, I'm thinking if somebody had taken me under their wing at age 16 and taught me about finances and business and the way it really works, wow, that would have been such a gift. So that's really wonderful. So before I let you go, LaWanna, is there anything else that you'd like to add?
I would just encourage anyone listening, whether you have a mortgage, thinking of getting a mortgage, when you sit down with that person, virtually or face-to-face, that mortgage broker or that banker, if the first thing they do is say, give me your name, your address, and your social, I want you to have a big question mark, because that's not who you are. They need to take the time to get to know who you are, why you're looking to purchase, what your dreams are, any challenges that you have, building that relationship. And that's what we do at the Bradford Group. We have that conversation, that deep conversation for 30 to 45 minutes. And then I can hear everything that I need to know to make a pretty strong decision if, in fact, it is the right time to do a loan with you. At that point, that's when we say, now let's take down the details. Now give me your credit. Now give me all your other personal information. But you will never hear us ask for your credit. Why should I pull your credit if at the end of the day, it's like, I can't do your loan? Why would I hit you that way? So I always tell people, find those that truly care about you and want to know what your dreams and visions are. And they're then able to help guide and navigate you to achieve, again, your dreams and your goals, not just put money in their pocket. Big difference. And I think that's what's helped us to be successful as mortgage brokers for 15 years and surviving, the crises as well as the pandemic. And one last thing, you asked about the advocacy. Our Celebrate You, Women Embracing Wellness, what we believe in this whole movement is that women, when they're truly able to rise up and celebrate who they are mentally, physically, emotionally, spiritually, and financially, because it does take money to impact change and to have the quality of life that we want, then and only then can they impact the lives of their family, the community, the nation, and the world. So through these dual advocacy roles, if you will, I see them coming together through the platform of Celebrate You and just the financial awareness campaigns that we put out there.
Well, I know I'm a member of Celebrate You, and I learn a lot every time I go to the group, which is probably daily. How can people reach out to you, LaWanna?
Yes, they can reach out to me on our website at Bradford Group, mtg.com, bradfordgroupmtg.com, or you can call 678-428-5589, 678-428-5589. That's my direct number. And if you want to find out a little bit more about how to be a part of Celebrate You and what we're all about, you can find us on Facebook under Celebrate You, Women Embracing Wellness. That's Celebrate You, Women Embracing Wellness.
Well, I love that. So everyone, make sure that you reach out to LaWanna Bradford at Bradford Group, mtg.com, and go find the Celebrate You, Women Embracing Wellness on Facebook. And again, it's jam-packed full of high energy and really high quality information. So LaWanna,
Tammy, I'm sorry, I forgot something really important, if I may. I apologize. Interrupting your beautiful clothes.
No, Andrew.
This is really, really important. So ladies and gentlemen, anyone that's listening, if you have not done your mortgage wellness checkup, please get your mortgage wellness checkup. Just like you do your annual physical, your annual mortgage checkup, it is free. If your broker or banker has never mentioned it to you and you want to have one, again, call us. We will give it to you, do one for you. And it gives you just an entire assessment of where you stand right now with your mortgage and with what's going on within and around your community. Because again, your foreclosures and things actually impact you and the cost of your home or what you think is a value of your home. So take time every year, do your mortgage wellness checkup, and you'll thank me for it. I promise.
Okay, that sounds good. Mortgage wellness checkup. Every time I listen to you, LaWanna, I go, oh my goodness, I need to do this.
And it's free. It's free for you. It's there.
Good. So everybody, make sure to go to bradfordgroupmtg.com and reach out to LaWanna and get that mortgage wellness checkup. And also go check out the Celebrate You, Women Embracing Wellness. And it'll just make your day a very happy and positive one. So thank you so much, LaWanna.
Thank you, Tammy. I appreciate it as always.
Thank you. Everyone, this is Tammy Patzer. Go make it a beautiful day.
Thanks for listening to Business Innovators Radio. To hear all episodes featuring leading industry influencers and trendsetters, visit us online at businessinnovatorsradio.com today.